Hello, 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 hello. Welcome to Accounting 101. I am so excited to be here with you today, on demand, wherever in the world you are and inside this group. So thank you so much for joining me. As we are waiting for people to arrive, there is a QR code on screen which you can scan on your phone to come and say hi to me. I'm going to do a full introduction in a couple of moments, but as we are just getting settled, lots of people watch these sessions on laptops, and so if you've got your phone in your hand, you can scan the QR code and say hi. We're talking about big topics today, but I'm breaking it down into bite-sized chunks. And so one of the best things that you can do in Rachel land, we're all British, we all feel uncomfortable talking about finances, but we're all self-employed. And so what can we do to lower the barriers to entry, get people that we love, people within our business owner community talking about their finances? The number one thing that you can do to let them see inside your financial well-being is to actually share the fact that you are here today. And so this is your opportunity before we get stuck in. Grab your phone, take a little snippet of me on screen. You've got the QR code so you can scan me wherever you consume social media content. I am at accountant_she. I'd love to be tagged in your Instagram stories as you are walking and talking your way through this content. This really is the stuff that we should be taught at school. And so the very, very best way that you can say thank you for me spending my time with you and delivering the content in this way is to share it on social media, tag me, give me some feedback, and tell your friends. So this session really is doing what it says on the tin. This is Accounting 101. This is the lesson we all seem to have missed at school. So if we were at school, if we had sort of 40 minutes together in a lesson style format, this is the content that we all seem to have missed. And so why am I qualified to teach this lesson? Hi, my name is Rachel and I am a disruptor in the accounting industry. I'm disrupting what it means to be an accountant, what it feels like to have an accountant, and I'm disrupting the concept that you can't scale a business to 7 figures without losing yourself along the way. I do that by creating long and short form, completely free, accessible content to my community, which at the time of recording this has just gone over 75,000 people for the very first time. Accountant She is a safe place for everybody to consume that content, to increase their financial education, and fundamentally to decrease the barriers to entry that currently exist to accessing financial education that truly changed my life. So I'm the founder of Accountant She, which is that online platform for consuming financial education, and I'm also the co-founder of Strivex. So Strivex is one of the UK's fastest scaling accountancy practices in the UK. We have got a team of 16, we are £1 million practice, and we've got 800 clients and 2 offices, one in the north in Manchester and one in the south just outside of Oxford. And within the practice, we offer statutory accounting services. So if you're looking for an accountant, you are in the right place. We do lots of consulting work, company valuations, work with companies that are about to go on or have just come off shows like Dragon's Den. We offer mortgage advice, specialising in working with self-employed people, and we offer audit services. And so through doing all of these things, I get to work with incredible brands, incredible people. I have won awards as an industry leader, a content creator, and as a great employer. But that is enough about me. What are we going to cover today? As I said, this is the curriculum that is very much driven by you. So through working with 800 small business owners and through holding their hand through their onboarding process and asking them lots and lots of questions and answering their questions, this is the content that comes up time and time again. And so this is the fundamentals of accounting that every business owner needs to know. So today we're going to cover company structure, so sole trader versus limited company, and how you can decide between the two of them. We're going to do business bank accounts and when to get one, how to track expenses, what expenses you can claim, accounting software and when you might need it or want it, how to pay yourself, how to plan and save for tax, and exactly when should you get an accountant. So just a little bit of housekeeping as we get stuck into today. I would love to hear from you. So if you get to the end of this session and you have still got some questions, please find me on social media. My Instagram DMs are really the hub, and that's where a lot of my community sit. So please do pop me a voice note, send me a picture, or just send me a question if you've still got a question by the end of today's session. But it's my goal that you will leave today with a lot of clarity. There's another QR code on the screen today, and that is where you can find lots more resources on demand. I do also have access to a financial university and a community membership. So if you already have an accountant or you don't need an accountant yet, but you love the way that I teach this financial education, you can see the benefit of having this increased level of financial well-being, and you want accountability in your life, I have a membership community where for £35 a month, you can join a community where you get to spend 2 hours with me every single month. The first is financial well-being, where every month we spend an hour together completely live going through your financial well-being routine. So planning and saving for tax, getting your records up to date, and really understanding what those numbers mean to you. The second hour that we get to spend together is Monk Mode, which is an hour in deep focus work, and we're just there for some accountability to get you working on your business rather than in your business, at least for an hour every single month. And then you also get access to my financial education university, which has over 50 hours of on-demand content broken down into sections exactly like we're doing today in bite-sized chunks, covering things like taxes, VAT, how to start, how to scale, and some non-financial resources too. So as we go through the session today, with every single topic, I'm covering this at quite a high level. And so wherever possible, using QR codes at the bottom of the screen, I'm going to be signposting you to more resources. Those are completely free on-demand resources, which are guided by me. And so if you feel like we're flying through a topic, it's just for the sake of time and just for the sake that not everybody watching this video, it might not be relevant to them. And so wherever possible, I use QR codes to give you the access to the content that you need on demand, whilst also keeping the pace nice and fast for everybody else. So let's get stuck in. So the order and the structure of the content today is very intentional. I'm going to hold your hand through the key decisions that you have to make when you are starting your business. Don't worry if you've already started though, because I think one of the best things you can get from this session is confidence. So if you're thinking, oh, I'm already a limited company, it might actually be that you don't know why you're a limited company. It could be that Dave down the pub, or you spoke to an accountant once and they told you to be. It's my job today to leave you better than I found you. And so it could be that you're not using today to make decisions, but it could actually be that you're using today to really just grow in that financial well-being and financial confidence as we go. So I deliver this content very much from a worldwide perspective, but I am a UK accountant. And so it's very important, if you are accessing this content from somewhere else in the world or from a specific industry, it's important that you do a little bit of research, or maybe find an accountant in your home country to just double check the information and check that the wording is location specific to you. So in the UK, we have two different ways that we can be self-employed. We've got being a sole trader, and then we've also got being a limited company. Being a sole trader is very similar to being in employment, in that you are operating as yourself, an individual, in the same way that you do in employment and self-employment. You run the business as yourself. So you and the business sit on the same seat. It is one thing and you're working all together. It's also similar to employment income in the sense that the types of taxes that we pay are very, very similar. So on your payslip in employment, you'll see taxes like PAYE and national insurance. As a sole trader, those are exactly the same types of taxes that you're going to see on your self-assessment tax return. So you're trading as yourself, and the types of taxes that you're going to be paying are very similar. So really, what's the difference? So I said that being a sole trader is very similar to employment versus self-employment, but what are the big differences? Because they are quite big. So the similarities are that we're trading as ourselves, and the types of taxes that we pay are very similar. The differences, and they are big differences, are the frequency at which we pay tax. So when you're employed, your employer sorts all of your taxes for you, and they take that out of your income before you receive it every single month. Whereas when you're self-employed, you'll be paying tax either 6 monthly or every 12 months. And it is your responsibility to calculate and pay your taxes yourself. So being a sole trader is similar in that it's us as an individual, but it's different in that the responsibility of calculating and paying that tax sits with us rather than an employer. So that's what being a sole trader means. And when people become self-employed, they really try and weigh up, should I be a sole trader or should I be a limited company? And the main reason that people move from being a sole trader or being a limited company or just start being a limited company from day one, we see three key reasons. The first reason is tax efficiency. I have accountancy behind me in LED lights, and I always say that I actually should just have tax efficiency because everybody's eyes light up when I say that. So the number one reason people move from being a sole trader to a limited company or become a limited company is tax efficiency. And what I mean by that is that as a limited company, there's more than one way that we can transfer profits from the company to you, and we can really lean into the tax efficiency options available to you. Now, everybody at this point always wants a number. They want to know, what can my profit be? Like, how do I know how much money I need to be making in order to gain that tax efficiency? Important piece to note here is that the number I'm about to give you assumes that you are not earning income from anywhere else and you are not on payroll anywhere else. We do the numbers every single year, and we also not only calculate the tax efficiencies, but we calculate the cost efficiencies as well. So this is based on the calculation that we will be saving you tax, and we'll also be able to offset that tax against the costs of getting an accountant, because when you become a limited company, there are increased costs because most people get an accountant. So that number that you're looking for is a profit, which is where we take your income, deduct your expenses, and profit is the difference between the two. A profit of 35,000 or above is the sweet spot for people to transition from being a sole trader to a limited company. Or if you've done a business plan and you think from day one you're going to be making a profit of over £35,000, or in year one you're going to be making a profit of more than £35,000, generally people would incorporate a limited company rather than a sole trader to gain that tax efficiency. So the first reason people incorporate limited companies is tax efficiency. The second reason is the word limited in limited company. So if we take accountancy limited, for example, that word limited at the end of the company name actually means limited liability. So when I explain that as a sole trader, you are the business and the business is you, also the liabilities of the business sit with you too. So that's financial liabilities, intangible liabilities, things like insurance policies, they all sit with you. So you sit on the same seat as the business. As a limited company, you are a separate legal entity, which is not only why we can bring in tax efficiency, but it also separates the liability so that the business is here and you as an individual are here. So it could be tax liabilities, it could be insurance policies, and very often that just makes people feel more comfortable. You don't have to have huge liabilities over here or build huge wealth over here for that to bring you peace of mind and comfort. And so as a well-being minded accountant, actually, I just want to give you permission that if that makes you feel comfortable and makes you feel a little bit better, green flag to you. So the first reason people incorporate limited companies is tax efficiency, the second is limited liability, and the third is for future protection. So intellectual property is everywhere in 2024, 2025 and beyond. Intellectual property can really help you to protect your name, your trademark, and any other intellectual property that you have. And so we do see lots of people incorporate limited companies to just really own their name and own that space online. And so that was a deep dive into sole trader versus limited company. You can see a QR code on screen right now. So if this is a decision that you have made, you need to make, or you just want further resources on, you can scan the QR code on the screen now, and it will take you to a video which is a bit longer than this, but it's really me deep diving all of these reasons. And again, you can watch it multiple times as well. Okay, so if we're going through your business owner journey, step one is that you've made the decision on your company structure. Step two, I want to talk to you about business bank accounts at this early stage, because if you take one thing from today's session, please take the fact that it is so important for your well-being and your accountant to split your banking. So if you are a limited company, it is a legal requirement to have a bank account in the company name and not your personal name. But if you are a sole trader, you actually don't have to have separate banking because you are the business is you, we pay all those taxes personally. You can actually have your banking all in one place. It is not something that I would recommend. And so if you take one thing from today, please, please, please set up a business bank account. If you are a sole trader, you can't get a business bank account. Again, it's not a separate entity. So you just need a bank account in your name, just a separate bank account. If you already have a personal bank account, it is very easy. And in just a few clicks, you can actually set up a separate current account with a separate card. And so the reason this is really, really important is because not only is it a mindset piece around separating yourself from the business in terms of separating your banking, separating your self-worth, how you feel about yourself, It is also an opportunity for us to get clarity. So separating your income, separating your expenses, separating how much cash you've got in the bank can really help us to do things like take tax out before we pay ourselves, which really will get you into a routine of paying yourself, which I think is one of the most important things that we can do as self-employed people. So not only can it give you clarity, but it can really help you when you get to the end of the year and you either need to pass that information over to an accountant or you need to go through those transactions and report your own tax return. So when to get one is as soon as possible. Do I need one? The answer is for limited companies, yes you do. For sole traders, it's not a legal requirement, but I would definitely recommend it. And then which is best? We have seen an explosion in the online digital bank market. We've got banks like Monzo, we've got banks like Starling. So many of our clients use Monzo and Starling. I use Starling for every single business. I have 4 limited companies, rental property portfolio, joint accounts, personal accounts. They are all Starling. I love Starling, not sponsored. Which is best? So the online digital banks are a 10 out of 10. We see lots of people use them because they're very intuitive. You can track expenses, you can bank checks, you can do all of the straightforward things that you would do with a traditional bank, just with enhanced functionality. Also, a super important point to note is that actually it's free business banking, and for a very long time business banking was not free. We had to pay for the privilege, but with the online digital banks we are seeing increases in free banking. So that was business bank accounts and when to get one. Okay, so now we've chosen our company structure, we've got our business banking set up, and you are at a till, you're thinking about spending some money, and you've got your business bank account and you've got your personal bank account. How do we decide what we can spend and where? So this session is going to be a bit of a deep dive into expenses, claiming expenses, the rules around claiming expenses, and I thought I'd start by actually explaining why claiming expenses is important. So when you become self-employed, lots of people will start saying things to you like, oh, don't forget to put that through, don't forget to claim for that, claim for that. Dave down the pub loves telling you to like take your husband out for a meal and put it through the business and call it a board meeting, or go on holiday with your partner and say that's a board meeting. And so I thought I'd just kick off by a really key educational piece around why claiming expenses fundamentally is important, because I think it will help you with your future decision-making skills. So I just thought I'd start with an educational piece, really talking about why that's important, because it will help you to make better decisions in the future. So, as self-employed people, so it doesn't matter if you are a sole trader or a limited company, we pay tax on the difference between our income and our expenses. So we have our income, we can deduct our expenses, and we pay tax on profit. So when you're in employment, you pay tax on everything that you earn. As self-employed people, we pay tax on profit. And so generally your income is what it is. We know how much money we've made, we know how many sales we've made, and we can't do too much to change that number. So income is what it is. But expenses, actually it's our job to make sure that you are being reimbursed at full cost for any expenses that you incur on or on behalf of the business. So this is why claiming expenses is important. So if you had an expense that you were like, no, I'm not going to claim that, or I didn't keep a receipt, so this is why keeping receipts is super important. But if you have an expense that you're like, I'm sure it's not worth it, I'm not going to claim that. Let's say it was £100. That would increase your profit by £100, and then that would increase the amount of tax that you pay by the tax rate at £100. And so every single expense that we can put through for you is really, really important. So that's why claiming expenses is important. But most importantly, what can you claim? So the HMRC rule states that in order for you to be able to claim something as a business expense, it has to be wholly and exclusively for the purpose of the business. So what I mean by that, and maybe a better way of phrasing it is, again, if you're at a till spending money and you're like, is it business, is it personal? The question I want you to ask yourself is, would I be spending this money if I wasn't self-employed? So I wouldn't have bought a YouTube camera if I wasn't self-employed. I wouldn't have bought a laptop. I wouldn't be buying stationery for my team. I wouldn't have a Microsoft subscription. And so if you wouldn't be spending that money if you weren't self-employed, that's a really great question to ask yourself. And so that expense needs to relate wholly and exclusively to your business. So that's the first test, is does it relate to my business? The second test is we need to make sure that you are keeping great records. So you need to make sure that for every line item included as income or expenses, you have got either an invoice or a receipt. Now, common misconception, I'll have said that and you'll immediately imagine a little shoebox of receipts under your bed. You don't have to do that anymore. HMRC, which is who we report to in the UK, accept digital records in place of hard records. And so lots of the banks that I mentioned earlier, you can now see why we're going through this in a specific order. Lots of the banks that I mentioned earlier actually have the ability to capture receipts with every single line item. I'm going to move on and talk about accounting software in a minute, which again can really help you to track those receipts. But also there's lots of other options, and you can do it in a way that feels very native to the way that you run your business. So some people keep things in platforms that they use like Dubsado, other people have email inboxes, other people have things like Google Drives or iCloud folders that just keep their receipts, and so if ever they were investigated, they can just pass those over. Another misconception before I move on to accounting software is that you have to attach receipts to your tax return. In the UK, you don't have to attach receipts to a tax return, you just enter the numbers and file it. However, it is your responsibility to keep those records in case you are investigated by HMRC. So every number that you put on a tax return, you have to be able to justify, and so it's really, really important that you do keep those records, and the length of time that you need to keep those records will depend on your company structure and the country that you are based in. Okay, so we have chosen our company structure. We know if we're a sole trader or a limited company. We have got a business bank account. We now understand how to track expenses, what we can claim as an expense, and fundamentally why it's important to track expenses in that way. The next question that people normally ask themselves or ask is, what is accounting software and when do I need to get it? So as with most things in finance, very often people think it's black and white, but in reality it's a spectrum, and accounting software is no different. And so when I'm talking about accounting software, really I'm going to zoom out a little bit further and talk about tracking expenses. So when you first start out as a self-employed person, normally, unless you have hit the ground running and you are making income from day one, most people's priority is to keep their costs down as low as possible for as long as possible. And it's only really sort of like as the business is growing and the volume of the transactions is growing, or all their priorities change slightly, that they then decide to get accounting software. So again, just a piece of permission, if keeping costs down as much as possible for as long as possible is your top priority, tracking your expenses through a separate bank account or on a spreadsheet or doing a hybrid of both is absolutely fine. The reason that people get accounting software and start investing a monthly cost is to give them a higher level of reporting, a higher level of data, a higher level of insight, and a lot of automation. So if you are someone who's manually typing in your income and expenses into a spreadsheet, actually accounting software uses AI and open banking to connect your bank account, your business bank account, into the software. And so it's automatically capturing a lot of the data that is happening within your business without you having to do very much at all. And so you can see how through that spectrum, people's priorities are changing from keeping costs down as low as possible to actually keeping the time spent down as low as possible. And that's where actually people choose to spend money to offset time for money. And so accounting software is where we use open banking. We are bringing your transactions into the software and we categorize. So we're just telling the software, this is income, this is an expense, this is who that was for, this is what it was for, and this is the tax rate that I need to charge it at if you are VAT registered. So with every single line item, we're telling the software what it was, why we spent it, and what it was for. Once we've done that and we've given the software all of our data, so we've categorized all of our transactions, let's say for a month, we can then go into the software, and because it's all in there, we can then start to draw information out. So we can run reports. We can run a report to tell you how much profit you've made, how many assets you hold, what your liabilities are, what your tax bill is going to be. We can do some cash flow forecasting. And so it can give you some really great insights and analytics, and it can also really help you to forecast as well. Some people know from day one that they want accounting software. They know that going through their transactions each month is not for them. Entering it into a spreadsheet or looking on their bank account is just not for them, and they do it straight away. But for a lot of people, that tipping point is really where you've got the money and you want to use that money to buy back your headspace. So you can see by on the screen here, we've got Sage, Xero and QuickBooks are the top accounting software providers in the UK. We as a practice are actually software agnostic, and so lots of people want a recommendation. The reason we're agnostic and the reason we take a holistic approach to software is fundamentally because of different types of integrations, because of the different types of the way that your business works and what you want to get out of your software. We can really help you to make an informed decision to not only find the price point that's right for you, but also find the product and the solution that is not only right for you now, but will help you to scale your business with that software too. And so there's a QR code on the screen to a video which can help you decide. which is Sage versus Xero versus QuickBooks. I got 3 team members who all absolutely love each software, and we fight it out. So we pick different business elements and we compare the software. You get to see inside each piece of software, and we go through pricing. So if you're at the point of your business journey where you are looking at accounting software, this is the video for you. So next up, we have spoken about looking at your income, looking at your expenses, understanding what your profit is. And this really is the most important slide. So many of us as self-employed people become self-employed to make money, but fundamentally don't understand how much money we're making, and we don't understand really how to pay ourselves, why it's important to pay ourselves. And this is one of the topics today that is a bit of a deep dive. And so I'm going to cover it at a high level, but again, there's a QR code on the screen to a video which actually walks and talks you through how to pay yourself every single month and the process that you should follow. But I just thought I'd explain the concept and the theory behind paying yourself and why it's important. So for me as a business owner, through scaling, business owners who don't pay themselves, very, very often I find that they're basically just building a job for themselves. So if you're not paying yourself, you are working in your business for free. But if you're paying yourself every single month, the money that is left over after you've paid yourself is really your true profit. So if I use an example, for me as a young female business owner, I know that I would love to have a family. And if I'm working in my business full time and I am not really paying myself, I'm taking maybe £20,000 a year. But actually, when I look at it at the end of the year, I'm not taking money out every single month. Maybe I've got a household income, or I'm just taking the bare minimum that I need to get through. If I am not paying myself every single month, if I, like I do, want a family, or I want to step back from my business, or I want to scale my business, it's going to cost me more than £20,000 to replace myself in my business. And so not only is paying yourself really important from a well-being perspective, to feel like you are making a difference, to feel like your personal life comes first, which it should, there's also a very practical element of, if you have scaling plans, or if you have goals of removing yourself from your business for whatever reason, for me, it was always having a family. I wanted and needed to know that I could remove myself from the business, replace myself, and still make profit. But if I'm not paying myself, if I replace myself, I'm using that money to pay those wages, and suddenly I'm not making anything. I'm actually just giving one person a job and there is nothing left over. So just a little TED talk from me on why it is very important to pay yourself, not only for your well-being, but also for your future business contingency. Paying yourself is something that at the first possible opportunity, you should be doing. So how to pay yourselves. This is a little bit different to sole trader versus limited company. And again, this is why I'm going to keep referring you back to this video, because it's long form and it covers both. But in essence, the principle of it is the same for both. The first thing and the first number we need to get to is your profit. So we take your income, we deduct your expenses, and the difference between those two numbers is your profit. Profit is the amount of money that is available for you to take after we have accounted for tax. In the next slide, I'm going to talk to you about planning and saving for tax. So once we've taken that tax out, if you are a limited company, we need to account for corporation tax and then personal tax. But if you're a sole trader, we just need to account for personal tax. Don't panic, as I've just said that. The 35,000 that I mentioned earlier, that's the number, that's the sweet spot. That includes, we've done all of the numbers, that includes accounting for corporation tax and personal tax, as opposed to just paying personal tax as a sole trader. So lots of people panic when I say there's 2 types of taxes, but again, all of those taxes are incorporated into that sweet spot of £35,000. So I've given you my TED talk on why fundamentally it is very important for our mental well-being, for the future success of your business, to pay yourself every single month. And I've gone through the high-level concept of calculating your profit, deducting your tax, and then paying yourself. But there's a little bit in that routine that I did skim over, and that is calculating tax. So we've got your profit, we calculate your tax, and that's how much you can pay yourself. And some people pay themselves a little bit every month and then take a big dividend at the end of the year, or they just try and withdraw as much every single month. It really depends on your risk profile and how much cash you like to have in your business bank account and in your personal bank account. So when we're thinking about planning and saving for tax, there are 2 different types of taxes that we need to plan for. If you're a limited company, there's 2 taxes. If you're a sole trader, there is 1. Again, I've got a QR code on the screen which you can watch, which is a full deep dive, a full step-by-step tutorial. And then once you've watched that video, you can save it, you can diarize it, and you can watch that video every single month. So with corporation tax, we need to calculate corporation tax. And again, one of the best bits about having those online digital banks is we can set up pots for you. So Starling pots or Monzo pots for corporation tax. And every month we're going to be calculating our tax and then popping the tax into your pot. Once you've set aside for corporation tax, then this is the same process for a sole trader and a limited company. That is how much is available for you to withdraw. Once we've got that withdrawal number, then we need to plan and save for personal tax. And again, I'm just going to direct you to this QR code, which is a deep dive step-by-step tutorial on exactly how to plan and save for tax. Normally at this point, people want a percentage. They want me to say, you should set aside X% of your earnings every single month and you'll be fine. The reason I can't and don't do that is because for every single personal situation, the tax rate that you pay is different. It could be that your household income is above a certain amount. It could be that you claim child tax credits. It could be that you have earning on payroll. It could be that you've got a lower personal allowance. And so there is a really strong reason why I don't and won't give you a percentage. And I would really encourage you to follow the step-by-step tutorial. And finally, obviously my favorite slide is when to get an accountant. So as you will have seen through the course of today, there are quite a few different reasons why getting an accountant would be great for your business. Not only just the way that I deliver content, the way I can explain things to you, the way that I can encourage you to claim for certain expenses. Lots of people, when they are calculating their taxes on their own, feel a little bit like they are walking through airport security. Like, you know you haven't done anything wrong and you haven't intentionally done anything wrong, but you're walking through airport security like, oh, don't pick me, like I just don't want it to happen. And so a lot of people do feel like that. But a lot of accountants would come into sessions like this, into communities like this, and would say, you should get an accountant now. I promise I can save you tax. I promise I can do these things for your business. That is not what I'm here to do. I take a very holistic and person-centered approach to finances. And so the answer to when to get an accountant is when you want one. But the benefits of getting an accountant are quite clear. So not only is the cost of an accountant a tax-deductible expense, which can reduce your profit and reduce your tax, but we can also help you. So clients of ours get access to those 2 hours of live content every single month. They get access to 2 extra webinars every single month, doing deep dives into financial topics and non-financial business owner topics. They get access to an accountant free. They can book time into an accountant's diary whenever they want. We do training, we do software training. So if you want to learn how to use Xero, QuickBooks or Sage, we teach you how. We do all of this stuff on demand. They have access to all of our content on demand, and we prepare all of your taxes and file all of your taxes as well. But the overarching theme for this slide is this is not a sales opportunity. And again, a lot of what I do in the session is give you permission to feel a certain way about your finances. And so the most important thing I could say on this slide is that you don't need an accountant. Lots of sole traders, self-employed people, file their taxes themselves. Most people, when they become a limited company, that is the point where they choose to get an accountant, but lots of sole traders choose to get an accountant before because, again, they're just trying to offset time and money. So this is the part where you have an opportunity to ask some questions. I'm gonna pop the slide onto slide 15 so I can show you the QR code. So if you have any questions as a result of today, once you have consumed the session, and again, this is on demand so you can watch it as many times as you like, once you have scanned the QR codes and you've followed through this content, if you still have questions, please do scan the QR code. Find me on Instagram, pop me a DM. If you are a client, just send me an email. I would love to know the questions that you've got after the session because I use those questions to curate the future content that I deliver. But again, I said it at the beginning, one of the very best things that you can do as a result of accessing today's session is actually talk about your finances, share your finances, share the fact that you are here, pop a little picture to post it on LinkedIn or post it on your Instagram stories. Like, this is the business owner content that we need to be talking about it and we need to see to just impact, like, it could literally change someone's life to see you investing in the financial side of your business. It could really give them permission to do that too. As always, you can find me at accountant_she everywhere that you consume content. You can hit the link in my bio if you'd like to access the financial education on demand, the financial university, the financial membership program, or if actually you'd like to be a client of ours, I would absolutely love to see you. And so again, you can just click the link in my bio and click become a client. Would absolutely love to see you. I'll see you in my DMs if you've got any questions, but thank you so much for spending some time with me today, and I hope to see you again very soon.